Good morning, Form 4. Today we will look at the General Journal, Part 3. In Part 1 and 2, I just introduced the General Journal, and then we spoke about bad debts, interest on overdue accounts of debtors, and when the owner takes goods for personal use. Today we will look at the cancellation of discounts on RD checks. So just to remind you that RD checks is when a debtor pays us by check and that check has been dishonored by the bank. In other words, the bank does not pay out any money to us because the debtor has no funds in his bank account. When this happens, the bank then returns the check to us, and on the face of the check it would have been written refer to drawer, hence RD. So when a check is received from a debtor that has been dishonored, the check is cancelled in the CPJ. The discount on the check, however, we could have given the debtor a discount for settling his account on time, and the discount is an expense to the business, and then it needs to be cancelled if we didn't receive the money from the debtor. So that cancellation is done in a general journal. To record the cancellation of the discount, our journal entry will read debit the debtor, so that we can debit his account in the debtor's ledger. By debiting the debtor, it means we are increasing his account again. We also debit the debtor's control account in the general journal. We then credit the discount, which is an expense to us, and we credit it to cancel it. That's what our narration will read. Let's look at this example. On the 18th of March, S. Shooter settled his account by check 570 Rand. So he paid us 570 Rand. We gave him a discount of 30 Rand. But on the 25th, the bank informed us that the check was not paid due to insufficient funds. Let's see how we handle this. On the 18th, S. Shooter is entered in the CRJ for 570, and we record his discounts of 30 Rand. We cancel the RD check in the cash payment journal, only the 570. Discounts allowed is a non-cash expense, so we can't cancel it in the cash payments journal. In the general journal, we then cancel the discount. We debit S. Shooter, which is the debtor, by 30 Rand, thereby increasing his account in the debtor's ledger, and then we will debit the debtor's control to increase our account in the general ledger. Discounts allowed is credited, and we then write our narration, and not forgetting, we underline the narration. Also not forgetting that the account that we're crediting must always be indented on the second line. We then total our debtors control columns. We add 6 Rand 40 plus 30 Rand, which gives us 36 Rand 40, and we total the debtors control credit column, which gives us 320. Let's post. Originally, the debtor paid us 570. We entered it into the cash receipts journal. We then debit bank and credit debtors control. We allowed him a discount, so we debit discounts allowed and credit debtors control. Now we need to take into consideration the dishonored check. So we debit debtors control to reverse the entry that he has when he paid us on the credit side. We debit debtors control and we credit bank. We debit debtors control with the discount, and we credit discount allowed with debtors control. Take note, we've written sundry accounts here because we posted the total of the debit side of debtors control from our general journal. We also post from the general journal from the credit side of the debtors control account. In our debtors ledger, we see that S. Shooter has a balance of 600 Rand on the 1st of March. He then paid us on the 18th of March with receipt number 8. This was taken from the cash receipts journal, and we also record the discount that we gave him. However, on the 21st, the check was dishonored, which we record, taken from the cash payments journal, and we debit his account to show that he owes us 570 Rand. We cancel the discount that we've given him, and we increase his account by 30 Rand. He then owes us 600 Rand. Our general journal is also used to correct errors. We use it if we have entered the incorrect amount, for example, from any journal into the general ledger. Once we've done this, we've posted the incorrect amount, we then complete a general journal entry to correct that. But that's just one example. When an error is discovered, the following has to take place. Number 1, we have to identify which accounts are affected. As usual, there will be 2. Once we've identified which account is affected, we need to determine which account was incorrectly debited or incorrectly credited. Now we can then establish which account we should have debited or credited, and then correct the error in the general journal. Different kinds of errors can be made. We could post from the wrong ledger account, or post to the wrong ledger account from the relevant subsidiary journals. We could post to the incorrect debtor or the incorrect creditor in those ledgers. We could also post the incorrect amount to any one of the ledgers. If this is the case, we need to correct it in the general journal. Let's look at this example. Stationery was bought on credit from Ream Stationers for 140 Rand and was posted from the creditor's journal to the consumable stores account in the general ledger. Correct the error. So let's apply our rules. Establish which accounts are affected. We bought stationery, so we know that stationery is going to increase. We also bought, no, we didn't buy anything else. We also bought it on credit. But the error wasn't the fact that we bought it on credit. The error came into being when we posted to the general ledger. We posted it to the consumable stores account and not to the stationery account. So we need to make that correction in the general journal. We debit stationery, which is what we should have originally have done, and we credit consumable stores account to take it out of consumable stores. What you've got to remember is that stationery is an expense, so when we debit stationery, we're increasing it, which is what we should have done. Consumable stores is also an expense, so when we increased it previously, we had debited. So now we need to credit it to cancel that mistake. narration again, and do not forget to underline your narrations. We total up the debtors control account by totaling the debit column and totaling the credit column. Interest on loan. Okay, you can read that. When we receive a loan, we make an entry in our cash receipts journal because we are receiving money. When we pay our loans, we make an entry in our cash payments journal to show that money is being paid out. But there are two parts to a loan. Whenever we receive loans, obviously we've got to know that the bank is not just going to give us money for nothing. There are costs involved, and those costs are called interest. So we need to pay interest back to the bank as well as what we owe the bank. What we owe the bank is called the capital portion, and then the costs are called interest. Both these amounts need to be paid back to the bank. Sometimes, however, we don't pay interest immediately. The interest could accumulate into the loan, and that is called the capitalization of interest. At the end of the financial year, that means at the end of a 12-month period, we will receive a loan statement from the bank. We need to record what the interest for the entire year should have been. So we debit interest on loan, which is an expense, and we credit the actual loan account, showing that our interest is going into the loan. We then have a narration called interest on loan is brought into account. Businesses also make investments. They make investments in fixed deposits or other types of investments like buying shares or buying unit trusts or endowments. However, not all interest on fixed deposits is paid out on a monthly basis. Sometimes businesses prefer to capitalize that interest. In other words, the interest that the bank would have given them, they prefer to reinvest it into the investment so that they can earn a higher interest. That's what we call capitalization of interest. To record this, we debit the fixed deposit or the investment, and we credit the interest on fixed deposit. The narration would be called interest earned on fixed deposit as per the state.